Welcome to the Sand to Pearls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart for February 12th, 2017. Market breadth. With this past week's market advance, our Bull-Bear Point and Figure ratio at 1.72 rose slightly from 1.66 last week, continuing within bullish territory. The total count of securities in bullish or bearish patterns decreased 1% to 3,106. The count of bearish stocks decreased 3%, while the count of stocks in bullish patterns decreased fractionally. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now 13 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Sand to Pearls Stock Market Commentary via email free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 11 points for the sixth decline in 13 weeks. At a positive 188.06 points, it has fallen below the November 2014 top, continues below the March 2015 top, the December 2016, April 2016, May 2016, and August 2016 tops, continues above the September 2014 top above plus 100, and continues above all 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 4 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum, now at a positive 145.52, up from a positive 114.23 last week. We wait for the CCI 20 daily to return to the plus or minus 50 zone for a potential new trade. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 41 weeks ago, while the daily CCI 20 began a Woody's uptrend 12 weeks ago. The CCI 20 weekly has risen to a positive 156.90 from a positive 145.03 last week. We await the return of the CCI 20 weekly to the plus or minus 50 range for another potential trade. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and only 2 of the bottom 5 are negative. Summary: gold and silver, some tech and brokers on top, oil and some tech on the bottom. Bullish, brokers and computer hardware continue in the top 5. Networkers has entered the top 5. Oil continues in the bottom 5. REITs has left the bottom 5. Bearish, semis, and disk drives have left the top 5. Oil services has left the bottom 5. Semis has entered the bottom 5. Focus this week from www.zerohedge.com Jim Rogers, we're about to have the worst economic problems of a lifetime. A lot of people will disappear. The following are a few pertinent excerpts. Get prepared because we're going to have the worst economic problems we've had in your lifetime or my lifetime. And when that happens, a lot of people are going to disappear. In 2008, Bear Stearns disappeared. Bear Stearns had been around over 90 years. Lehman Brothers disappeared. Lehman Brothers had been around over 150 years. A long, long time, a long, glorious history. They've been through wars, depression, civil war. They've been through everything. And yet, they disappear. So the next time around, it's going to be worse than anything we've seen, and a lot of institutions, people, companies, even countries, certainly governments, and maybe even countries are going to disappear. I hope you get very worried. When you start having bear markets, as you, I'm sure, well know, one bad thing happens and another bad thing happens. And these things snowball just like in bull markets. Good news comes out, and then more good news comes out. The next thing you know, you're 5 or 6, 7 years into a bull market. Well, bear markets do the same thing. And so we have a lot of bad news on the horizon. I haven't even gotten to war. I haven't even gotten to trade war or anything like that. But, you know, things do go wrong. On that light note, thank you for viewing this week's Sand to Pearls Stock Market Commentary video featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up. Wishing you true success.